What is going on, everybody? Today we are going over Apple stock. A lot of people have requested Apple stock. So yeah, we're gonna find two things about Apple. First thing, we're gonna find the fair value of Apple stock according to Warren Buffett. As mentioned in the book, the intelligent investor, according to his mentor Benjamin Graham. And the second thing we're gonna find after the fair value, we're gonna find the price that Warren Buffett will actually be a buyer, even though he is already a buyer. And we're gonna go over the financials of Apple and try to understand why Warren Buffett actually made a major purchase a couple months back of Apple stock. I'm gonna go over the valuation of the financials. I'm gonna make it super simple to understand balance sheet, cash flow, how to read some financials for beginners. It's gonna be fun. Let's get started. Let's go. So I'm in Yahoo Finance looking at Apple as today 122.5. I think it's the all-time high. No, it was 138 a couple of weeks ago after the split. It has a 2 trillion plus market cap, pretty insane. Dividend, they pay dividend. Warren Buffett likes that fact, and we're gonna check the financials in a couple of minutes. Yearly target 125. According to Yahoo Finance analyst, it is the stock is overvalued, but everybody loves Apple, including myself. So the first item we are going to put in the Excel is this one, EPS TTM. Earning per share trailing 12 months. We got a price of 328, so we're gonna go to our Excel and put 320. This is the Excel. I'm gonna put in here EPS 3.28. That's basically it. So we got ourselves the formula of how to value a stock like Warren Buffett. It's Excel that I made based on the book The Intelligent Investor. If you guys have any stocks that you have in your portfolio or would like to actually do this by yourself, you can get this Excel and many other good stuff in my Patreon. Description is below. $10 a month or 2 cups of Starbucks coffee will get you in. So let's check this out and let's move forward. The next item on our list is PE 8.5. This is a constant ratio. As you can see in the instruction, constant means yellow. 8.5, that's a number from the book. I'm not changing that, and that's basically it, even though the PE of Apple is different. Next on our list is growth. We're gonna find the growth of Apple, and we're gonna find that in Yahoo Finance as well. Let's go. Back in Yahoo Finance, I'm going to the analysis tab again, and I'm scrolling all the way down, and I'm looking for this number. Next 5 years per annual, the growth of Apple, and again, still like 13 years in the making, every year different iPhone, and still they're gonna grow at 12.6% per year. It's pretty crazy. Next quarter they're gonna grow by 34%, 20% growth this year. Pandemic, recession, nobody cares. Everyone will buy Apple, iPhone, MacBooks, whatever the case. It's just insane. This company goes and goes and goes, and just there's a reason why Warren Buffett is a smart person, invested in Apple, and we're gonna check the financials in a second to see why he actually did so. So I'm taking this number 12.64 and I'm gonna put it in. So I'm in the Excel, in the growth column, I'm gonna put 12.64. Very nice. And after that we got number 2, that's a constant, I'm not changing that. And the number 4.4 after that, not changing that as well. Corporate bond. And after that we're gonna find the Apple AAA bond yield. But before we do, we're gonna dive into their financials. Instead of just going blindly on the formula, we're gonna try and find out super simple beginner way what is going on with the financial statements. It's not boring, I'm promising you. It's gonna be fun. You're gonna learn and educate yourself on actually how to value financials of a stock instead of getting a tip from TikTok or YouTube. Follow me along. Back in Yahoo Finance, very simple. Everything is that we need is in Yahoo Finance. We're going here, financial tab. Stay with me, guys. Financial tab. We have 3 columns, free stuff in here. We got, look at this, income statement. That's number 1. Number 2, balance sheet. Okay. Number 3, cash flow. We're gonna take ratios according to Warren Buffett, which I will tell you which ratios he likes, percentages stuff, and once we get them, if it's above or below, we're gonna find out if it's a great stock. I assume I know it's a great stock, and Warren Buffett knows that as well. That's why he bought, but I want to understand why he bought Apple stock. So let's get started. What am I looking for in the first one? Income statement. Sure, you got all those crazy numbers right here. It does matter, but it's not our focus. You want to make it simple, beginner friendly, and how to read an income statement of Apple stock. So what are we doing? First, you look from right to left, 2018, 2019, 2010, all this. That's the total revenue. How much they make from selling, MacBooks and Apple and iPhones and on so on. So they made in 2018 265. Look at this number first. The 265. All numbers are in thousands. That's what it tells you. All the numbers are in thousands. So I'm just taking the first three numbers and I'm multiplied by 1,000. So they made $265 billion. The year after that they made 260 billion, and the year after that, and which is 2020, by September they made a lot more. They made 274 billion, so they're even growing even now. And the trailing 12 months they made almost 274, which is crazy. So everyone in pandemic, people saying they don't have money, but they have money to buy iPhone, MacBook, and all that stuff. Something to ponder on. But I'm looking at this ratio. I'm looking for two ratios in income statement. Look at the first one, gross profit. How much gross, not net, how much gross they made from the total revenue, meaning they sold an iPhone and how much they made gross before they paid lease, rent, employee salaries, and all that stuff. So we got a number, 104 billion. So I'm taking 104 billion and I'm dividing that by 273. And Warren Buffett says if the number is over 40% gross, you got yourself a great company that can scale and all that stuff. So we're going to go to a calculator and look for a number, and hopefully we'll see above 40%, give or take. So here's my calculator. I'm doing 104 divided by 273. I got myself, multiplied that by 100, a 38%. Not bad. It should be around 40. It's pretty awesome. It's not bad. Most companies that I evaluated are, I don't know, 5%, 7%, even the big guys. So 38% gross is pretty awesome. The next thing on our list, we're gonna check for net. How much net profit they make for every product that they sell. Meaning if they invest $1 by producing an iPhone, are they gonna make, $1.10, like extra 10 cents per dollar that they make. Warren Buffett would like to see 20% net and above, of course, 20% net. Where are we looking for that? I'm gonna scroll all the way here. Don't ignore, but it's not relevant for the basic financial understanding. We're gonna go here. This is the number, diluted NI, net income. This is net income for the stockholders, and then diluted net income available for the stockholders, 58 billion. 0.4. So I'm taking 58, I can do 58.4, just roughly 58 billion divided by a total revenue. That's it. You take the gross profit divided by the revenue and you want 40%, and then you take the net divided by the total revenue and you want 20% net. So let's go here to the calculator. I'm gonna do 58 billion divided by 273. And I got myself 21.2 net. That's crazy. You know what? It's not just crazy. It's amazing number. And that it is Apple at the end of the day. It's not some other company. Warren Buffett bought Apple for a reason. He knows his number. And this number is checked out. 21% net. So meaning that for every iPhone, every dollar that they spend making iPhone, they're getting $1.21 back. That's crazy. Next item on our list is now in the balance sheet. Balance sheet, second column. Okay, balance sheet. That's it. We finished with the income statement. Sure, you can dig deeper, read every number out there, think, then see what you want to see. Make stuff simple. That's like Warren Buffett step 1 to value a company. If it passes 40% gross, 20% net, he moves to the second step, which is the balance sheet. In the balance sheet, we're gonna look at a couple of things. Okay, we got ourselves, I'm focusing on this one on the year 2020, and we're looking at this. We got total assets. I want this to grow. 375 billion, 365, 338, 323. So the assets, they're not growing, but the most important part, and they're probably not growing because they pay dividend. That's why Warren Buffett likes them, and they do buybacks. I'm looking at this one specifically. Total liabilities, I'm going to open this. I'm looking for the second one, which is this. I'm going to tell you in a second why. Long term, that's what I care about. And Warren Buffett, long term debt and capital, like how much do you owe long term? What's the first one? The first one, if you see, guys, current liabilities 105 billion. That's like paychecks, salaries, employees, inventory, stuff that they cover on a month-to-month basis. But this number, total non-current liabilities, this is all their offices that they lease, and they like triple net, and then I don't know, like tons of stuff that they don't need to pay now. And this number, total long-term debt, 98 billion, okay? 98 billion, it grew from 91 billion to 98. Warren Buffett would like this number to be, we're going to calculate in a second. We're going to take this, I'm going to show you. He wants this number to be paid off in 4 years or less. How? We're going to go back to the income statement for the net income price, and whatever they made as a net income, if it covers 4 years or less of the debt, then that's a great buy. Meaning that if $98 billion can get paid by the net income for the next 4 years, great. If not, he moves to the next company. As simple as that. I don't know him, but that's from what I know how we do stuff. So I'm gonna take this number 98. I'm back in the income statement. Okay, I'm gonna go down here, divided by 58. That's what I need. Diluted 58. 98 divided by 58. I want a number that is below 4. And this is below 4 from what I see. 1.68. So barely, basically a year and a half. Something like a year and 7 months, give or take. Less than 2 years, let's be conservative. Apple can pay their entire long-term debt in less than barely 18 months, less than 2 years. Pretty awesome. As long as this number is below 4, meaning you can pay your long-term debt in 4 years or less, it is a good company to move to the next step. Apple checks this mark as well. And the next step is cash flow. We're going to go to the cash flow state. I'm now in the third tab, cash flow. There we go. I hope you see that it's not that scary reading financials of a company. Let me know in the comment below, what do you guys think. Let's go over a few key points in the cash flow balance. We got a few key numbers in here. Operating cash flow, investing cash flow, okay, and finance cash flow. We need to see 3 numbers. Ideally, operating cash flow positive, and we got ourselves positive, 80 billion, 80 billion, 70 billion, 70 positive in the first. Investing negative, we got the negative. That's a great thing, and I'm going to explain why. And the third one, financial cash flow negative, and we got ourselves a negative. Great thing. Just looking at stuff, I see great thing. What does that mean? The first thing, operating cash flow 80 billion, that's the money that Apple makes from actually selling products. Operation, let's again, we need plus, minus, and minus. If you get a company that has plus, minus, and a positive at the end, cash flow positive, free cash flow, you see a positive number, 71 billion. It's a great company. We're gonna do ratios in a second. What happens here? Operating cash flow, you want this number to be positive. That means that they're selling their products. Their cash flow actually coming from selling their product, not from refinance debt or diluting shareholders or all that stuff. Their money, their cash flow coming from actually selling Apple products. That's what we want to see in a company, and there's a reason why Warren Buffett is a buyer. That's pretty good. Next one on our list is investing cash flow. meaning that from whatever that they have as cash flow, they are investing in the future of this company, maybe buying more, I don't know, more real estate to put Apple stores, maybe investing in more manufacture, more factories, whatever the case, they're investing. You want this number to be a negative, so they invested another $10 billion year to date, and that's crazy. A couple of 2 years ago, yes, last year they invested 45 billion, and then 4 billion, and then 10 billion. Just investing. And if you click deeper, cash flow from continue investing, purchase and sell, net business, maybe they bought another businesses, the other companies, whatever the case, pretty awesome. You want this number to be the negative. Next item on our list is the third one, finance cash flow. You want this to be a negative as well, minus 86 billion. What does 86 billion mean? Means two things. Means they did the dividend as well as buyback and probably some debt. We're gonna check how much debt, but this is, you want this number to be negative. They taking money from their cash flow and they're very efficient. With the cash flow that they have, for the company, they're buying back their stock, they're paying dividend, they're doing good stuff. And the end of end cash position is 35, but we're looking at a little more stuff just to see what we see. This is the next ratio that and the last ratio that I'm looking for, the financial issuance of capital. Capital expeditive, 8.3 billion. So they took basically from the cash flow 8.3 billion, and the question is, what they have done with that. How efficient is this company by spending money? And that's exactly the whole picture that I just mentioned. They invest, they did some buybacks, they gave some dividends, they took some refinance of short and long-term debt, all that good stuff. I'm looking for this number. I'm gonna divide it by the net income from the first income statement that we saw. And we're gonna get a number ideally below 25%. Buffett says that if this number is below 25%, then the company, the management, can actually know what they're doing with their extra money and how to invest it to grow that company even further. Average companies has average good is between 25 and 50%. It's over 50%. Basically, the management doesn't really know how to spend their extra cash. But ideally, you want to see a number that is below 25%. So I'm going to take this number, 8302, 8,302,000,000. So I got 8302, and I'm going to divide it by here, 52,422,000,000. Okay. So we're going to go back to our calculator, 8302. Divided by 58,424,000,000, and I would like to see below 25%, and we got ourselves a nice number of 14.2%. It's not nice, it's an exceptional number. Basically, Apple check all the financial box, which is pretty awesome. There's a reason why Apple is Apple and why Warren Buffett is an Apple shareholder. And the last thing that we're gonna need to find out is actually, after all this financials get checked out, and comment below, guys, if this was too complicated, or just comment, yes, I get it, this is for the beginners, financials, I'm happy to learn, all that good stuff. And feel free to also write subscribe to my channel. Let's go see how much Apple is actually a buyer. If Warren Buffett, he already bought, but will he be a buyer today at almost 123 bucks? So I googled Apple corporate bond, and I saw a few numbers, and I found 3.85. That's the number I'm putting here. I'm back in the Excel. AAA bond yield for Apple, I'm gonna put 385. That's the highest. I saw 2%, 3 something. 385 is the highest. And basically, once I'm gonna click enter, I'm gonna find two things. I'm gonna find the fair value of Apple stock, as well as the price that Warren Buffett will be a buyer. Now keep in mind, financials are great and everything is great. Warren Buffett bought it, I don't know, like 6 months ago or something, if not more. And we did so like, I don't know, like 100% run after they said that they're gonna do a stock split. So whatever that number, it could be higher, but I could be wrong. I don't know. We're doing this live. But either way, I'm gonna click enter, and without further ado, guys, and also guys, if I bring you any value, check below description, Patreon, $10 a month, where you can get this formula to analyze your own stocks, as well as get some selling options for income trades that we are doing on a weekly basis, so you can generate money by selling options. And a link to the Patreon in the description below. And without further ado, I'm gonna click enter and find the fair value of Apple stock. So thumb to the down, okay, we got something interesting. Apple is at 122, and the fair value of Apple is 126, which is I don't know, like 3% from here to the upside, according to everything. And Warren Buffett would be a buyer at the price of around $85. If you do 85, because we saw a split, I'm gonna it was a 4-to-1 split, so he would be a buyer at the price of 340. I assume that's when he actually bought the stock, 340. And if you take the price now, 122 times 4, we are almost at the 500. So we had that price a couple of months ago. We're not there yet. Apple is a great stock. Would I buy Apple now with a very limited upside? Sure, Apple can go up to 1,000, whatever the case. But according to everything that I see, Apple is worth 126, and I'm not buying Apple unless you already have Apple. That's a different story. But if you don't, do whatever that you want. Not a financial advice, but I'm not buying unless it's going down 30%, which it's a lot. We were at this price, but you never know the future. Maybe we will see a stock market crash and we can get Apple for cheap. But according to Buffett and the financials, great company to hold long term, and it's worth almost where it is now. That's the problem with stocks that go up 100% in like 2-3 months. That's yeah. Anyway, guys, if I bring you any sort of value, don't forget to subscribe, hit that bell notification, write some comments below which stocks would you like me to do next, and watch the videos somewhere on the screen. I'm gonna link for other great Warren Buffett valuation. I don't know, yeah, there we go. That's my cue. So I will see you guys next time. Hope you enjoyed, and yeah, thank you very much. Bye bye.